Good morning, viewers. It's Monday morning, May 5, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Wall Street stocks advanced on Friday, notching the second straight week of gains, helped by strong economic data and potential easing of trade tensions between the US and China. Stocks extended the multi-day climb on Friday following better than expected job numbers and signs of a potential thaw between Washington and Beijing. Major indexes got a midway boost after it was reported that Beijing is considering ways to address the Trump administration's gripes over China's role in the fentanyl trade. Stocks were already climbing in response to other signs of hope for better relationship between Beijing and Washington. China said it is evaluating starting talks to halt a trade war, but only if US shows sincerity through measures such as canceling unilateral tariffs. The tit for tat tariffs between the world's two largest economies have kept investors on edge, with both sides unwilling to be seen backing down in a trade war that has roiled global markets. Beijing said on Friday it was evaluating an offer from Washington to hold talks over President Trump's 145% tariffs, which he had imposed on Chinese imports. Friday's non-farm payrolls report, the first since tariff announcement, roiled market, showing the US added 177,000 jobs last month, beating expectations. Unemployment held steady at 4.2%. The data helped to assuage concerns of an economic slowdown following a Commerce Department report showing a contraction in US gross domestic product for the first time in 3 years, weighed down by a tariff-induced flood of imports. On Friday at close, the Dow Jones Industrial Average rose 564 points or 1.39% to 41,317. The S&P 500 gained 83 points or 1.47% to 5,687, and the Nasdaq Composite gained 267 points or 1.51% to 17,978. The Russell 2000 index of small companies rose 2.3%, outperforming the S&P, Dow, and Nasdaq. The S&P 500 reached its ninth consecutive session of gains, matching a winning streak from 2004, while the Dow hit a 9-day winning streak for the first time since December 2023. For the week, the S&P 500 gained 2.9%, the Dow climbed 3%, and the Nasdaq added 3.43%. Trump's reversal of some tariffs have helped U.S. stock indexes recover from recent losses. Tech-heavy Nasdaq was trading at levels last seen before April 2, dubbed Liberation Day, when the president unveiled massive global tariffs. Trump's decision not to fire Fed Chair Jerome Powell has stoked optimism that the president will hold back on making moves that would significantly disrupt markets. Another factor driving gains, many big investors dumped stocks so aggressively that they now have to pile back in or risk getting left behind and underperforming their peers. Still, investor nerves remain, with the mood surrounding big tech turning warrior after earnings from Apple and Amazon disappointed. Amazon predicted a solid quarter, but the lower ends of its forecasts were below what analysts expected. Amazon dipped 0.1%. Apple trimmed its shares buyback program by $10 billion, and CEO Tim Cook told analysts that tariffs could add about $900 million in cost this quarter and warned that the figure could rise further ahead. The iPhone maker's shares slipped 3.7%. Other so-called Magnificent Seven stocks such as Meta Platform rose 4.3% and Nvidia gained 2.6%. Chevron rose 1.6% and ExxonMobil gained 0.4% after both energy giants reported quarterly results. Meanwhile, Cash App parent Block flagged a pronounced shift in consumer behavior, saying users had cut back on non-essentials like travel and media. Shares in Block, which missed quarterly profit forecast and cut its annual outlook, tumbled 20%. Video game maker Take-Two Interactive fell nearly 7% after it delayed the release of Grand Theft Auto 6 to May 2026. In other trading, the dollar index retreated after a 3-day rally. The 10-year Treasury yield rose after jobs data, settling at 4.317%. It had settled Thursday at around 4.22%. Gold futures jumped after a 3 day sell off, trading about $3,260 a troy ounce. My take: the road ahead. In a week where surprises were overflowing, one of the biggest surprises, from top tier economic indicators to company earnings and policy decisions from around the world, was how steadfast financial markets were. Number one, economic indicator. Figures showed that the US economy shrank in the first quarter, the first contraction in 3 years. Consumer sentiment is at a metaphorical abyss for now. Some of this gloom was countered by unequivocally positive figures coming out of April's non farm payrolls report. Two, corporate front. With uncertainty surrounding tariffs, several leading global firms cut or declined to give forecasts in their first quarter earnings. Yet, the overall tone from these calls last week was positive, and investors have consistently bought the post Liberation Day dip. Hence, the huge price swings in individual shares and assets. However, in the US at least, there's little evidence that trade uncertainty is prompting companies to lay off workers or jack prices. Not yet, anyway. Three, policy making. There's a growing belief that US President Donald Trump is backing away from his more belligerent tariff threats, and that a more receptive Washington is closing in on several bilateral trade deals. Tensions with China may even be cooling too. But this is only half the story. US stocks closed the week with gains of up to 3%. The dollar advanced, treasury yields rose, and the VIX index of US equity market volatility eased. On the surface, a strong week for investor sentiment and risk sentiment. Remember, what today is saying is that the economy is a lot stronger than people thought and a lot more resilient in the face of all of these tariffs and fears about tariffs. But for markets, that suggests choppy waters ahead rather than plain sailing. And that's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@money.com for any further information. I'll see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it is all about money.